afternoon, happy Friday. This is Sean LaBelle of the Decker Hewitt Group. North American markets were decidedly down this week as investors largely shrugged off a considerably better than expected earnings report. We're a little over halfway through earnings, and the number of companies beating estimates is actually record-breaking here. 85% of companies have surpassed expectations, and the margin of beat is also quite historic. We're seeing the average company beat by around 18%. That normally compares to a 2 to 3% beats out of a company. In terms of GDP, we also had a big U.S. record this week. On Thursday, U.S. GDP came in over 33% quarter over quarter. That also beat expectations of 32%. Again, that was largely shrugged off by investors, despite it once again being an absolutely historic beat. Just in terms of where we are now and where we were when we entered the year, we're still down about 3.5% in terms of U.S. GDP. So not quite where we were when we entered the year, but nonetheless, some astonishing gains that we've seen so far in this quarter. Of course, investors' attention was focused on the upcoming U.S. election next week, along with rising COVID cases globally. This week's Market Watch Weekly looks into the U.S. election a little bit more. We make the argument for staying your course. Don't try to time the market. You look to these periods of volatility as an opportunity to buy. Again, this was our message to investors during that Q1 sell-off. And those that listened and did take advantage of some weakness in share prices were definitely rewarded. This week's Market Watch Weekly dives into that conversation quite a bit. Shows some pretty impressive charts and numbers to back up our claims, so definitely worth a look. Otherwise, hope everyone has a good weekend. Happy Halloween and stay safe out there. We'll talk to you again next week. Cheers.